Morning, everyone, and thank you very much for joining me. It's the morning market review. It's Friday, and it is the 4th of November. My name is Russell Shaw. I'm a senior market specialist at FXCM, and my email address rshaw@fxcm.com. It's going to bring up the market commentaries disclaimer. Just want to check, can you guys see the screen, and can you hear me loud and clear? Just want to make sure. Okay, excellent. Hey, Anna, morning to you. So what I'll do is I shall go through the email and I'll turn the camera on. Don't think it's much point having the camera on whilst I'm reading an email. Here's the references: MarketScope, TradingView, Bloomberg, and Forex Factory. We're going to have the live trade today. I've put the link in the chat. So if you guys want to register for that, just click the link in the chat. And if that doesn't work, just send me an email. I'm happy to send you the link via email. Let's just go through the Bloomberg 5 things to know. So the first headline reads, "Can go higher." European Central Bank President Christine Lagarde said there's still a way to go on raising interest rates to counter record inflation. Price growth in the Eurozone, which hit 10.7% last month, is way too high, Lagarde said Thursday evening in an interview with Latvian television. She said the ECB is going to use all its instruments to return to the 2% target. Lagarde said earlier at a conference in Riga that whilst a mild recession is possible, it wouldn't be sufficient to tame inflation. Next headline reads, UK recession. Britain is headed for a deep recession, with the Bank of England working to clamp down on inflation in a move that may cost the economy at least 500,000 jobs. The UK Central Bank pushed through its biggest interest rate increase in 33 years on Thursday, bringing the benchmark lending rate to a 14-year high of 3%. It estimated unemployment may rise to just above 5%, even if borrowing costs remain steady and the economy may shrink 1.7% over 18 months. The outlook underscores the headwinds Rishi Sunak's government faces in the run-up to the next election, while the Treasury planning a package of spending cuts and tax increases. Scholz in Beijing. German Chancellor Olaf Scholz has arrived in China with a major business delegation for his first in-person meeting with President Xi Jinping. As tensions rise between Beijing and Brussels, Xi is welcoming the first major European leader to China in more than 2 years on the heels of a domestic political victory, having just secured a precedent-defying third term in office. The one-day visit on Friday also comes as China rebounds this week from a record market rout sparked by policies Xi laid out at last month's Congress. Extreme inversion. A key segment of the US Treasury curve reached new extremes of inversion Thursday, a level not seen since the early 1980s, when the Fed was also aggressively tightening. The 2-year notes yield exceeded the 10-year notes by as much as 58.6 basis points. The inversion briefly exceeded 58 points on August 10th, last seen 40 years ago. And that was in Paul Volcker's tenure as Fed chair. Coming up, European stocks nudged higher and Asian shares advanced ahead of key US jobs report. The UN's Food and Agriculture Organization releases its monthly index of world food prices. ECB President Christine Lagarde and Boston Fed President Susan Collins speak at events. Data include German factory orders and French industrial production. All right, now let's just go through the Forex Factory. And you can see that we're going to get the average hourly earnings, non-farm employment change. So that's the big news for today. And we're going to be doing a live trade there. Non-farm employment change expected to come in at 197,000. So job creation certainly declining in terms of trend. Because if you just take a look at the skyline, it's sort of moving in that southeasterly direction. All right, a few things I think that we need to take a look at here. So first of all, this is the real rate. I've added the bands so you can see, so we can look at it in terms of the zones. So the rates have pushed now into zone 1, and the US dollar did close in zone 1 yesterday. It's now sort of on the border, so it's I wouldn't be surprised if it does push through into zone 1 conclusively, provided that the real rate stays in zone 1. So we've got red 2 days of up movement, so sort of a dip in the uptrend. So perhaps US dollar exploitable today. We'll take a look at that in close detail in a moment. I'm going to take the US dollar out. Let's just change this, and then I'm going to bring in an indicator for the real rate. Let's just go through to NASDAQ. All right, so you can see that as the real rate's pushed into zone 1, no surprise, NASDAQ's pushed into zone 3. And the NASDAQ actually is get hit from 2 sides. So I just want to do a very quick explanation of that. I'm going to bring up my Microsoft Paint. We won't get too in depth with the math, but again, so you've got present value equals cash flow divided by 1 plus, we'll just call it interest. All right, so the earnings have been very poor, so the numerator is coming down. Okay, so that's the first part of the hit, and then interest rates are starting to move up. So that's the second part of the hit. So with the it should be CF, not FC. So with the cash flow coming down, with the interest rates pushing up, the net effect is pressure to the downside. And I think that's what's being reflected here in NASDAQ. Okay, so we want to just, I think, keep monitoring the real rate. And what we can do here, let's just close this. Let's throw, I wanted in a bunch of width just to get an extra dimension here. Yeah, sorry, this is the one, Bollinger Bands width. Let's bring that in. It was right. All right. There's obviously some sort of spike there, but you can see that the squeeze, there's a lag on my system here. So there's a squeeze. So the last time we saw a squeeze was here. Okay, so you can see the Bollinger width dropping there. There's a squeeze here, right? Just the theory behind Bollinger squeezes is a potential calm before the storm, right? The likelihood of it dropping down, I think, is remote. It very much depends on that median inflation. But if we get an expansion and it hugs the zone 1, well, then I think dollar continues to get supported. NASDAQ continues to get pressurized. risk assets continue to get pressurized. So it's just interesting to see that the squeeze is on now. So if we kind of even drop it a bit more, we shall see if it sort of pops out of this 0.4, and if there's an expansion in interest rates, that's going to be a rout. You know, if there's an expansion in the real rate there. So this is looking very interesting in terms of perhaps just sort of a hypothesis posing potential last capitulation. Now, I don't know if that's going to happen, but the squeeze over here, I think, is something that is worth taking note of. And if we pop up here, does that cause that final capitulation? And asking why 0.4. I'm just no reason. I'm just finding the line of best fit. So this is the last time there's a squeeze here. You can take it sort of lower. The idea here is, there's no hard and fast level here. What we're really just trying to do is confirm where the squeezes are. So why did I put 0.4 here? Just because it included the last squeeze over there. That's why. The more important point is that there is a squeeze. Okay, and now, you know, are we going to get that expansion? So we want to just keep an eye on that. And then I think it's worth just taking a look at the inversion of the yield curve. And we've looked at this before. I'll go through to a weekly here. And I mean, this is a deep, look at the spark down here. I wonder if this is even accurate. This would be, well, doesn't look quite right. This looks like something, I don't think that's quite right. But nevertheless, without this sort of anomaly here, you can just see how deep the inversion is. Let's go and bring up all the history. And you can see the last time we spoke about, we're not going back to 1980. We don't have that history here. So you can see that the movement here, very, very deep indeed. What do the numbers mean on the y-axis? For the Bollinger width, bring that up. All right, so when you get to zero here, there's no gap. Theoretically, that's impossible because of the nature of the calculation, right? So it's measuring the gap between them. Okay, so zero is no gap. So as we get closer and closer to zero, the tighter and tighter the squeeze. Does that help? So that's what these numbers represent. Probably, I would imagine it's a percentage apart. All right. No, we took a look at the dollar in the beginning, and we saw that there was a sort of some red, potential dip in the uptrend. Let's take a look. I don't want the day trading out. I must have changed this. I'm just going back to the main layout here. Okay, cool. So let's go through to the daily. So you can see yesterday it closed in zone 1. Now we've got some red. Okay, so there's the dip in the uptrend. Take a look at the Bollinger on a daily basis. It's hinged. It's moving up towards 80. Of course, it hits this 80 level. It hits the 80 level and holds. Well, that's the swing. See there, it holds. There's swing. There it holds. There's the swing. Now we're making our way there. But we've got this little bit of red. Well, let's go down to the hour. And given that the dollar's looking actually fairly strong, well, then we may have a 1, 2, 2, 3. Okay. And if we've got that 1, 2, 2, 3, that might be the bar the dip opportunity. How do we measure that? Well, let's put our signals. So we want to see if we get the exponential moving average crossing positively, and we want to see if we get the stochastic moving positively. Now, even if we get those two signals, it really needs momentum. Without the momentum, we're not going to get the pips accumulating. See there, it holds the 80. There's the swing, nice swing there. So we're going to see if that happens. I don't have the signals just yet, but of course, hey Katie, morning. So we want to see if we get the crossover here now. If there is a potential 1, 2, 2, 3 on US dollar, I would suggest there is probably similar the other majors, except to the downside. So let's go through to the euro and let's take a look there. All right, let's start off with the daily here. And you can see it yesterday. So this is a similar chart to the dollar. It closed in zone 3. Now it's on that border. And guess what? We've got some blue in this leg down. In other words, is this a potential rally in a downtrend? Is this something that is exploitable, right? So it's heading here. Let's go down to the hourly. Let's get rid of that. Let's get rid of that. Okay, now to look here. 1, 2. See the heartbeat? 2, 3. Okay. If this is a bona fide 1, 2, 2, 3, then are we going to get the next 1, 2? Okay. Well, what we'll do is we'll have to monitor the signals. So the system's just going to hang now. We've just gone to the DAX cash open. We'll take a look at the DAX next. Can we go through NASDAQ and oil? Yeah, we can. So I looked at NASDAQ just regards to the real rate. So I'll put the recording on Telegram. So just that's what you missed in the beginning. But we'll do a sort of a top down on the NASDAQ. So you can see here is a potential. Here's a potential crossover, but we don't have it yet. Potential doesn't mean we have the crossover, right? Here's a potential crossover, so we're waiting to see if those signals materialize. And of course, it really now depends if we get the movement to the downside. Here is the stochastic hanging out in the lower quintile, and that's where the magic happened, right? There we go. It's a nice leg. That's a nice swing. So there is something that looks like it could be materializing. Whether it does or it doesn't, nobody knows. We've got to wait for the signals, and even then, we've got to wait for the momentum. Now, the big caveat here is, of course, it's non-farm payroll Friday. So even if we get the crossovers, things can change very quickly when we get the non-farm employment release. So that extra layer of volatility, or that's extra risk. So even if you do get the signals and you decide, hey, this is a good opportunity and I may want to take this, it could change in a heartbeat depending on the release of that non-farm payroll. So just be aware of that. Let's take a look at the pound. This is after the 75 basis points yesterday. Sorry, let's look at first, and then we'll go to DAX next. All right, so you can see that again, a pound did close in zone 3, and look, euro, it's on the border, like the dollar's on the border, except on the upper blue, euro pound on the lower blue. That makes sense. Okay, and now it's starting to move downwards. We've got blue in a weakness. Is this a rally in a downtrend that we can take advantage of? So we go through to our hourly, and it looks as if we might have a heartbeat here as well. 1, 2, 2, 3. If it's legitimate, we should get the next 1, 2. How do we tell? Well, we need the market to prove itself. We need the signals. Okay, we don't have the signals. And again, even if we get the signals, they're only going to work out if we get the momentum. Okay, and because we don't know if we get momentum, you must use the risk management, must use stop loss in all your trades. But if you get something that hangs out in that low quintile, that's where the magic happens. See. All right, let's take a look at DAX. All right, so this is an int chart. This is hold in zone 1. That is, of course, the bullish zone. I'm a little bit nervous about this. I'm not sure if it's going to be able to maintain in zone 1 because of the pressure on interest rates. If the interest rates push up, I think that ultimately DAX get pushed to the downside. But at the moment, it is hold. We are in zone 1. So a sort of a high risk chart. You've got to decide if it kind of meets with your risk profile. I wouldn't be trading this on my side, but you can see that it's moved into that upper quintile. And as long as it holds that upper quintile, there's going to be a positive momentum, and it should break the R1. If it drops from that, 80 and moves down, then that momentum's waned, and then that R1 resistant wins out. Then it pushes down. Hey Howard, nice to have you on. No worries. Thank you very much for joining. All right, so this is a very interesting chart. I think there is a certain risk attached to this chart, but it wouldn't only be with the chart. We'll go down to NASDAQ. We've already seen how NASDAQ's fallen into zone 3. Okay, and you can see there's some blue. So we've gone into zone 3. Okay, well, let's get the heartbeat. 1, 2, 2, 3. Is it legitimate? Then we should get another heartbeat. Okay, here's the rally. Okay, do we get the cross here? And if we do we get the momentum? And we don't know because of the nature of the calendar today. But if it holds here, okay, you get these really big swings. Now, again, any trades you take must have a stop loss, must have risk management. Just be aware of that. And I was going to mention something here. It's just eluded me for a moment. I'll see if I can. I remember what I wanted to say. Just coming back to, let's just go. Where is this? I want to just go back to the Forex calendar. If we get a number that's considerably higher than 197,000, if we get inflation coming through in average hourly earnings, I actually think that's going to be dollar positive, and I think that's going to hurt risk. So that's something just to consider ahead of the non-farm employment change. All right. Let's go through to oil. Let's have a quick look at oil. All right. So oil to me is looking pretty good. We've got this higher trough here, and I want to see if we get this higher peak in. So we've got the platform for higher prices. What I think's happening here is the Chinese economy, I think, is looking to reopen after really strict COVID lockdowns. I think that there's a rumor that a committee has been formed in the Bureau to manage the reopening, and they are the second biggest user of oil, and of course that's going to push demand up. And I think that's what's being reflected. Yesterday it fell out of zone. It's looking to get back into zone 1, so there is a little bit of sort of argy-bargy going here, but the stochastic's moving into that 80 area. If it's there, then the momentum builds. And on the hourly chart here, Katie, you just see we've just moved into this upper quintile. Okay, so if it holds the upper quintile, then I think the strength builds. We at R2, which seems quite strong. This is an hourly. So over the last 4 hours, we've kind of hit R2, boom, boom, and been rejected. The question now is if we can hold 80 tonight. If we fall out of 80, then R2's sort of one round. If we hold 80, we should push above it. All right. We're going to have that live trade on for non-farm payroll. Please join me for that. The link is in the chat. If you don't have it, or if you have issues in the chat, just send me an email. I'm happy to email the link to you. Any questions, please go ahead and enter those. I was just asking to send it again. Yeah. Okay, I've just pasted it again. Alrighty. If you have any issues there, just email me. I'll respond to your email. All right, guys. Let's wrap up here. Thank you very much for joining me, and I shall see you a little later in the day. Thanks very much.